guess what? You are in complete control, 100% responsible for how you want to respond to that event in your life. Therefore, you determine the outcome. Well, why in the world am I sharing that formula? That's the formula that plays out and explains what happened to me in this world of private money. What was the event? The bank cut me off. I didn't have anything to
Mhm.
do with that, right? I had an
Yeah,
800 credit score. I had a
yeah.
great 6-year record. The bank cut me off because of the market. Now, I could respond any way I wanted to. Most people are walking around with the formula of E equals O. The event determined my outcome, not
Right,
so. Since
right.
I'm responsible for my response, I could have crawled in a hole or I could have done what I did. And that is I responded for seeking and looking for a better and different way to fund my deals. So therefore, I found a better and different way. That's private money and private lending. And now the outcome is, guess what, Paul? The first 12 months of learning about private money and being cut off from the banks, Carol Joy and I tripled our income.
Welcome, entrepreneurial agent listeners. Today, I have the distinct honor and privilege of inviting a guest on here today who's just ripping it up in real estate and doing it in some really unconventional ways. He's been doing it for quite some time. I've got Jay Connor, the Private Money Authority, on today. Jay, welcome to the show.
Hey, Paul, thank you so much for me being invited to be here on the show with you to talk about the topic I'm so passionate and excited about, that being private money and private lending, because that alone has had more of an impact on my business in the entire 20 years that we've been in real estate.
Wow, private money, private lending. This sounds exciting. So I want to dig right into that and jump right in. But before that, just give everyone sort of a little background about how you got into real estate, your experience and all that.
Sure. Well, I was raised right here in Eastern North Carolina, moved out to Texas long ago and met my wife, Carol Joy, my first Sunday in town at church. And we've been dating about 37 years. We haven't been married 36 of those. But anyway, yeah, I was raised in the mobile home, most people call it manufactured housing industry. And I knew if I ever got out of that business, I wanted to get into single family houses. The consumer finance for mobile homes, manufactured housing pretty much went away in 2003. So that's when we started investing here in Eastern North Carolina. We're in a very, very small market. Our total target market is only 40,000 people, but we do 2 or 3 deals a month. Our average profits now are $71,000 per single family house that we do. So you don't need to do more than 2 or 3 of those a month in order for that math to work out over the year. But anyway, the first 6 years, Paul, that we were in this business from 2003 until 2009, we relied on the local banks to fund our deals. That's all I knew about was just traditional funding, go to the local bank, get a line of credit. And so in January of 2009, I called up my banker. I here in North Carolina, we actually still have landlines that have phones attached to handsets. But
Wait. What is that?
yeah, it's a handset. It's a handset.
Okay.
But I called him a banker. I had 2 houses under contract. This was January 2009 after being in the business and having a relationship with this bank for 6 years. Well, I learned very quickly that my line of credit had been closed with no notice. And Paul, I didn't know there was a global financial crisis going on until I got a crisis and I can't fund my deals, right?
Right.
So I hung up the phone. And I tell you, Paul, one of the very first mantras that I wrote that I still say to this day, and that is it's impossible for you to fail unless you choose to quit. And so I sat here and I said, well, what are my options? And then the question that I asked myself, this question will serve you no matter what in personal relationships, in your personal life, in your business life. I asked myself the question, who do I know that can help me with my challenge, with my problem here of losing my line of credit. Well, the first person that came to mind was a good friend of mine. His name is Jeff. He lived in Greensboro, North Carolina at the time. He was a real estate investor. And I called him up and I told him what had happened. He said, well, welcome to the club, Jay. I said, what club is that, Jeff? He said, the club of getting cut off at the bank and losing your line of credit. He said, they cut me off last week. I said, well, how are you going to fund your deals? He says, well, have you heard of private money and private lending? And I said, no, what's that? Jeff told me about it, and I put my program together. I decided what I was going to offer and teach potential private lenders as to what my program looked like and how they could earn high rates of return safely and securely. So I put on my teacher hat. Paul, to this day, I've yet to ask any lender to loan me money. I've yet to pitch a deal. And people say, Jay, how do you have $8.5 million in private money for funding your deals? It's because I teach people, individuals, human beings, what private money, what private lending, what self-directed IRAs are, that being companies where people can transfer their retirement funds to and loan that money out and invest in real estate and get unlimited money per year, either tax deferred or tax free. So I put on my teacher hat. I started teaching people about private money in my own warm market that I had some kind of relationship with. You know, the worst time to raise private money is when you need it. So I just started teaching them, right? And they would tell me how much money they have to invest. And so I was able to raise $2,150,000 in less than 90 days, just here in my local area of being cut off from the bank. Since that time, I've never missed out on a real estate deal for not having the funding. We've got about $8.5 million in private money now that we use. That's coming from 45 different private lenders that are funding our deals. And I tell you, Paul, as I said, if it hadn't have been for that biggest blessing in disguise that I've ever had and pushing through that obstacle, I mean, that's made the biggest impact on our real estate business. And if it hadn't have been for that experience, you and I wouldn't be here together today.
Oh, that's true. That's true. Well, I think it was it Napoleon Hill that said every adversity has a seed of an equal or greater opportunity or benefit in it if you're looking for it.
That's right. Absolutely. I mean, you know, I learned a really, really important formula from Jack Canfield a few years ago, which really puts you in control of your destiny. You know, Jack Canfield is the co-author of the Chicken Soup for the Soul series. Carol Joy, my wife, and I, we went to his Breakthrough to Success event. And here's the formula that I learned. The formula is E plus R equals O. And that stands for event plus your response determines or equals the outcome. You know, a lot of people are walking around viewing themselves as a victim instead of victor. You know, no matter what happens in your life, maybe you caused it, maybe you didn't, but something happened in your life. Guess what? You are in complete control, 100% responsible for how you want to respond to that event in your life. Therefore, you determine the outcome. Well, why in the world am I sharing that formula? That's the formula that plays out and explains what happened to me in this world of private money. What was the event? The bank cut me off. I didn't have anything to do with that, right? I had an 800 credit score. I had a great 6-year record. The bank cut me off because of the market. Now, I could respond any way I wanted to. You know, most people are walking around with the formula of E equals O. The event determined my outcome, not so. Since I'm responsible for my response, I could have crawled in a hole, or I could have done what I did. And that is I responded for seeking and looking for a better and different way to fund my deals. So therefore, I found a better and different way. That's private money and private lending. And now the outcome is, guess what, Paul? The first 12 months of learning about private money and being cut off from the banks, Carol Joy and I tripled our income. Because you remember back in 2007, 8, 9, you had all those foreclosures going on, and you had to have the cash to buy them, and the banks weren't loaning money. So if you had access to the cash, you could pick and choose. Hence, we tripled our income Well, there's a little similarity going on in our market right now today with foreclosures, again, at an all-time high since
Mm.
2009. So by having the private money, it puts you in the driver's seat and you can decide which deals you want to do and not miss out on any deals.
Well, my brother was in a similar situation in right after 2008 in the meltdown, non-related business. He was not a real estate investor, but he chose that opportunity to get in. And he had a private investor. Well, he had one or two private investors. He didn't have a group of them, which I'm not sure your system, you might could talk a little bit about that. But this particular private investor had been successful in real estate, and they were at an age in their life where they were liquidating properties and they had cash, but they wanted returns. They didn't want to put it in the market. And so he had a trusted relationship with them. He'd known them for a long time. And so they were basically his funding source. And he had no competition because, as you said, Jay, the banks weren't loaning money and he was stealing deals. I mean, stealing opportunities. It's crazy now we look back on what he did, but it was really amazing.
Yeah, well, that's what we're talking about. We're talking about doing business with individuals, human beings that will fund our deals. We're not talking about institutional money. We're not talking about hard money. And, I say establish as many relationships as you can with funding sources. Some of my best friends are hard money lenders.
Right.
The difference between hard money and private money is hard money is typically a broker that's going out and raised private money, increases the interest rate for their return and charges points and fees and et cetera. When you're doing business with private lenders, you're going directly to the source, the funding sources that will fund your real estate deals.
So basically what you're saying is, as a real estate investor, then instead of me going to the traditional mechanisms and the bank is kind of fun. I've told people for a long time, the bank is not your friend. They really
Well, wait a
represent
minute now. Wait a minute, Paul. Wait a minute. Banker will give you an umbrella when the sun is shining.
well, he will, but their real customers are the board of directors and the regulators, and that's it. It's not you. You're just a sort of a necessary evil. And when the sun is shining, as you said, your best friends will take you to lunch every month. But after that, not so much. But you're suggesting that, okay, well, I want to be in the real estate game. I need access to capital. If I use only my own money, then I'm going to be limited on how much I can do, right? So unless I, won the lottery or what have you.
That's
So
a big point, Paul. That's a big point right there. Not to interrupt you, but while I'm thinking about it, I mean, any more these days, I got to grab it while I got it or it gets
yeah,
cold. But,
that's okay.
but that's a big point right there. When I was borrowing money from the banks for my real estate deals, I had a limit to the amount of money I could borrow. I had $1 million line of credit, which
Right,
ain't going to go very far. Like,
right.
if you want to invest in more than 2 or 3 or 4 properties and get those going. But in this world of private money, there's no limit to the number of private lenders that you can have. And there's no limit to the amount of private money that you can be using. Carol Joy and I, we've got 45 private lenders
hmm
that are funding our deals, about $8.5 million. And, another question I get, Paul, and I'll turn it back over to you. Another question I get is they say, well, Jay, if you're making all that money, why in the world are you borrowing private money? And that's a great question. If you're just going to do one deal or 2 deals and you're going to get in and out pretty fast, that's a great way to use your cash and get, returns. But if you're going to be doing 12 or 15 deals like I am simultaneously, I'm not putting all my cash in all those
Right,
deals.
right, right. No, absolutely. I mean, everyone should diversify their capital base, and so you're not all in one place. And if you put all your money in there, and you can only turn it so fast. So when you talk about real estate deals, so you're specifically more in the value add space. Is that where you teach in terms of acquire, improve a property, and then we're going to resell it at some point?
In this market, by and large, yes, most of the properties that we're buying, of course, there's nothing in the multiple listing service. There's still no inventory
Right,
by and large, as of the date of this recording.
right.
But here's my rule of thumb. When I can buy a property, a house, creatively on terms, if I can buy it subject to the existing note, which means the seller agrees to transfer ownership of that house and they agree to leave the mortgage in their name and you make their payments. Well, that's buying subject to the existing note. or if it's free and clear and I can buy it with seller financing, we'll do that. But when the seller requires all the cash, of course, we're using private money. So when I buy on terms, I'll typically sell on terms, sell it on rent to own. But the majority of our that we're making today, number one, since there's nothing in the multiple listing service at any kind of a discount, all of our deals we're buying are directly from owners of those properties. We call them off-market houses or for sale by owners, FSBOs.
Right.
Well, it's important to have a consistent lead flow coming in. Most of my leads are coming in today from Google pay-per-click ad campaigns. And so we'll buy directly from those owners of those properties. And the majority of those properties that we buy, they do need some kind of renovation or rehab. Well, why is that? Well, good night. If they were in great shape, they'd put them in the multiple listing service and get retail, right?
Right.
But these properties are needing some kind of renovation, and the owner, for whatever reason, either doesn't have the financial resources to do that or they're not interested. We just put a house under contract. We're scheduled to close on it next Tuesday over in Havelock, North Carolina, at 205 Forest View Drive. The after repaired value is $225,000. We're buying it for $105,000, and the renovation is only $30,000. So you ask yourself the question, why in the world, who in the world would sell a property with a after repaired value of $225,000 for $105,000? Well, I can tell you, this property is an inheritance. And so it is the heirs, the two sisters, that contacted us through our marketing saying, hey, we want to sell as is. They don't have the money, don't want to put money in the property, and they don't have any interest in the property. They just want to liquidate. Right. So a motivated seller is who will sell at that kind of a discount. And here's one more quick lesson while I'm thinking about that story, Paul. Those two sisters said they would not take one penny less than $130,000. Don't even offer me anything less than $130,000.
Yeah.
So we knew the after repaired value, what it was, but we didn't know what the renovation was until we went and looked. We ran the numbers, and I told my acquisitionist, I said, offer $105,000, all cash, and we'll close in 2 weeks. My acquisitionist, after being with me for 15 years, said, Jay, they said they won't take a penny less than $130,000. You know what I learned over the years, Paul? And of course, I know your real estate agents and your real estate investors know this already, but a seller really doesn't know what they'll take until they have the offer in hand. Make your offer as clean as possible. Make it all cash if you're using private money, and justify the offer. Tell the seller how you came up with your dollar and you just didn't pull it out of your ear.
Right.
Well, we made the offer. They accepted the offer. We're under contract to close next Tuesday. The moral of the story is, if I hadn't had private money ready to close, I wouldn't be getting the deal. If I had to go to the bank and borrow the money, I wouldn't be getting the deal. And if I hadn't made the offer and justified the offer, regardless of the asking price, I would have missed out.
Wow. You know, that's funny because that question was banging back and forth in my mind, why somebody would accept so much less than the ARV of the property. And you answered it. But then I was thinking back at the same time about a couple of properties that my brother and I acquired about a little over 2 years ago now. It was a similar deal. It was inheritance. The seller had plenty of money, but he inherited a lot of properties and some cash, and he didn't want the hassle of dealing with rentals and things like that. And in addition to him selling it to us at a major discount, I think the Google value or the Zillow value was like $325,000, and we got it for, I think, $150,000.
There you go.
He's seller finance on it as well.
There you go. Well, you know, what you just said reminds me, so many houses that I buy that need renovation, I buy the majority of them at 50% or less of the after repaired value. Not 50. I mean, that's what we compare it to, is what's the after repaired value. But, you know, that reminds me, Paul, it's the math that makes the decision on how much to offer.
Mm,
Your emotions cannot and must not, I made this mistake long ago,
yeah.
your emotions cannot come into play as to what to offer for a property. It's the math that makes the decision.
Well, and that does not just apply to real estate investing. That applies to any investing, whether you're going to buy a business or stock or whatever. Most people lose in the stock market because they buy and sell on emotion, right? When what was it, Warren Buffett that says, "Be greedy when others are fearful, and fearful when others are greedy." So it's the
That's good
opposite,
advice.
right? I mean, it's the opposite emotionally or psychologically to approach a market. So you have to be very planned about it. Here's a question that I have for you, because obviously one of the benefits of private money is the ability to close quickly, right? So you get an edge on someone, and and you can make a cash offer, as opposed to maybe if there's multiple offers coming in, someone has to secure financing or whatever. That's, to me, seems like a major benefit. Does that help you?
I get more offers accepted than my competition. And sometimes, and a lot of times, I will actually get our offer accepted, and our purchase price offer is less
Mhm.
than somebody else's offer.
Yeah,
So why do they accept our offer? Well, number one, we are able to provide proof of funds if they want it. We got the cash ready to go.
right.
Number two, when you tell somebody you can close in a week or 2 weeks,
Yeah.
your competition is not in all likelihood going to be able to do that. And fast closings gets more offers accepted.
Yeah. Yeah. No doubt. No doubt. With all my history in real estate goes back to 1998. And I would concur on that people want A, to know for sure they are going to close, and two, how fast can we, because if there's any question about, actually closing, which we know sometimes they go sideways, deals go sideways for whatever, maybe it's a bad appraisal. Maybe there's the borrower's got a skeleton in the closet. Maybe as what happened to me in 2007 and 8, when we were funding lots of transactions, the lenders that were funding some of our transactions were just going out of business, and we didn't even know it. We had one particular borrower at the closing table 2, 3 times waiting for the money to get wired in, and we're like, "Where's the money?" And come to find out, the lender, Lehman Brothers was one of them, just whoop, out of business, right? So they can
Overnight.
go sideways. If you don't have cash, it can go sideways for a lot of different reasons. So I can see the motivation. So, okay. So what about this? We have a lot of entrepreneurs, business owners that have some pretty sophisticated businesses and whatnot. They're always concerned about, and I think everyone should be concerned to a degree, about compliance and doing above board. Are there like SEC requirements or anything when you're, raising private money? Is that a concern that people should be, thinking about in that world?
Well, yes, it is. And you need to know what the law is. And here's the good news, it's very simple. So the rules changed, the law changed a few years ago. You actually can now what's called openly solicit. You can actually go on the TV, you can go on the radio, you can do direct mail campaigns, you can go on social media and openly solicit to the entire world with one caveat. You are restricted when you do that. And I don't do that because I don't have to. And you don't have to do that because you don't have to. But if you do so, then you're limited to borrowing from what we call accredited investor, right? So an accredited investor is going to have at least $1 million worth of net worth, not including their primary residence. And they need to show that they made $250,000 in taxable income over the last couple of years. I've never had that constraint of only borrowing from accredited investors because all the borrowing that I do is by networking and referral, right? I don't go on the internet. I don't go on the
Uh,
radio, right? And I do it through teaching. I never ask anybody for money. I
mm,
don't openly solicit for money. I teach my private lending program. How are they protected? What's the interest rate that a private lender can get through my program, how they can get their money back in case of an emergency. So I just teach them the program. Now,
gotcha.
when they're interested, they're asking me, well, what do I do? Write you a check? Do they have retirement funds? Do I need to introduce them to my trusted self-directed IRA company that I
Mm,
refer my private lenders to that have retirement funds to invest? So it's just because of my approach. I teach people what it is. And if they're interested, now they're chasing me.
Gotcha. And so that flips the table. You're no longer actually soliciting that at any point. And so you're not in need of accredited investors necessarily.
Exactly. And I've never pitched a deal. They say, well, Jay, how in the world do you get a deal funded if you don't pitch it? Well, it's the stages of your communication. We first teach the private lending program. They tell us if they're interested. If they are, if they've got investment capital or retirement funds, they're interested. Where else can they get these kinds of rates of return safely and securely? And they tell us how much we got to work with. And so then I tell them, well, I will put your funds to work just as quick as I can. So it might be a week, it might be 2 weeks, it might be 30 days at the most. And Paul, I'll call them up and I don't ask them if they want to fund this deal. That's the most stupid question I could ask in my life. Of course they want to fund the deal. They've been waiting on the phone call. I'm not going to bring them a deal to fund unless it fits the criteria of the program that I taught them. So I'll call them up. I say, I got great news. I got a house in Newport with an after repaired value of $200,000. Funding required is $150,000. That's 75% of the after repaired value. And the closing is scheduled for next Thursday. So you'll need to have your funds wired to my real estate attorney's trust account next Wednesday. End of conversation.
Right.
Right. I mean, if I ask them if they want to fund the deal, I just put doubt in their mind. They can say, well, maybe I shouldn't fund this deal. Should I not fund this deal? You know?
Well, if they've looked at their 401k statement, they're going to be like, yeah, maybe I should fund this deal, right?
Yeah. Well, and I tell you, in recent times, I mean, I've got more private money chasing me than ever before. Yeah. Why is that? Because of the volatility of the stock market. People are sick and tired of not knowing what their portfolio is going to be worth next week. And in this program, private lending program, they know exactly what their investment is worth because nothing comes out of their principal loan amount, and they know exactly what the return is going to be.
What's a typical return? I'm not going to hold you to this, and I know it can vary based upon situations, but I mean, if someone says, hey, I'm interested in, lending my money, what could I expect?
On average, 8%. 8%. And so different private lenders want different payouts. Some of our elderly private lenders want monthly income. So we pay them a monthly interest-only check. Some are happy with quarterly. Some are happy with semi-annual. And you can actually structure the deal to where the interest just accrues until you cash out if you're flipping the property. At the end of the day, I let the private lender tell me, how often do you want checks? It's not going to change how much money you're earning, but you tell us, and that's what we'll do for you.
So it's unique to each investor. They all have different requirements and needs. Your system is a very flexible approach based on what they need. And so do a lot of the private money investors, with your experience, Jay, do they just let it roll? Like we did this and then, let's do another one and do another one. And so you're building your capital base.
Yeah. When I've got a house that's ready to cash out and we contact the private lender and let them know we're going to be paying them off, if this is their first deal, they inevitably say, well, can't you just keep the money? Can't you just keep the money and let it keep earning interest? Well, the answer is yes. If I have another property that I'm either buying or what have you, that I can substitute the collateral. You see, we don't borrow any unsecured money. You can legally, but don't do it. Secure that note with the real estate that you're buying and protect your private lender. Right. So I don't keep the money unless there is a property that is securing that note.
That makes sense. Yeah. Okay. So it's always going to be tied to a specific piece of real estate, which protects everyone, a trust account you're dealing with and all that. You're just, okay. Awesome. So talk a little bit about, as we wind down here, you've obviously systematized this. This is something that you've done for yourself and refined. And I think you make this available to people. Talk about what's that about? How does someone get in contact with you? What's that look like?
Sure. Well, I'm so passionate about sharing with other either brand new real estate investors or seasoned real estate investors how it is that I do private money. and how you can have money sitting on the shelf all the time to make your offers. Stu and Harriet Baldwin up in Elmira, New York, we started working together with them 2 years ago, and they already had over 100 houses in their portfolio and had already raised millions of dollars in private money. And I also work with brand new real estate investors looking to get funding for their deals. So how in the world can you get started? Well, I'm so excited. I just recently finished writing my new private money guide, which is called 7 Reasons Why Private Money Will Skyrocket Your Real Estate Business and help you build incredible wealth. It's absolutely free. You can download it, get on the fast track to private money for your deals at jayconner.com/money guide. Again, that's jayconner.com/money guide. Download this private money guide, get on the fast track to getting your own private money, pick and choose the deals you want, and never miss out on another real estate deal because you did not have the money.
Wow. Well, that's fantastic. So I would suggest if you're in real estate investing, you want to get in real estate investing, this is something that you want to build your wealth or increase your wealth or diversify. What an amazing way to do it. And Jay's got a great solution here. I'm excited about it. And thanks for making that resource available, Jay.
Absolutely, Paul. I appreciate you having me on here.
And is that the best way to get in contact with you? Maybe just go to your website if they don't download it, jayconner.com?
Sure. Like if they don't want to download the money guide, just go to jayconner.com, and there's all of our contact information and other educational real estate investing resources as well.
Oh, that's exciting. Well, look, I appreciate your time. This has been a lot of fun today.
I've really enjoyed it, Paul. Thank you so much for having me on, and God bless you.
Yeah, God bless you too.